Top 5 Crypto Trading Mistakes Beginners Make. Hey, it's the Crypto Guru. Listen, I get it. You see Bitcoin going to the moon, Ethereum defying gravity, and Dogecoin? Well, Dogecoining, and you want in on the action. That's awesome. But before you ape in and risk your hard-earned cash, let's talk about some common and expensive mistakes that beginners make in the crypto market. We're going to break down the top 5 things to avoid so you can protect your capital and set yourself up for success in this wild, wild world of crypto. Let's go! Alright, imagine this. You're scrolling on Twitter, refreshing CoinMarketCap, and bam! You see some obscure coin like Hamster Coin pumping 500% in the last hour. Everyone's talking about it, people are saying it's the next Bitcoin, and you feel that FOMO fear of missing out creeping in. Trust me, I've been there. We all have. You jump in, buy at the top thinking it's gonna go even higher, and then what happens? It crashes harder than your hopes and dreams of ever owning a Lambo. This, my friends, is the classic mistake of chasing pumps. Remember, when something goes parabolic, it almost always comes crashing back down to earth. Instead of chasing those green candles, learn to identify solid projects with real utility and wait for pullbacks. Do your research, look for undervalued assets, and buy when there's blood in the streets. That's how you stack those SATs and build a strong portfolio for the long term. Listen, even if you had a crystal ball that told you exactly which coin was going to be the next Bitcoin, you know what? You could still lose all your money. How? No risk management. It's the difference between gambling and investing. Would you go to a casino and throw all your money on one spin of the roulette wheel? Probably not. The same principle applies to crypto. Never, and I mean never, put all your eggs in one basket. Even if you believe in a project with every fiber of your being, diversify your portfolio. Use stop-loss orders to automatically sell if a trade goes against you. And for the love of Satoshi, don't risk more than you can afford to lose. A good rule of thumb, risk no more than 1 to 2% of your portfolio on any single trade. Remember, preserving your capital is just as important, if not more important, than making profits. One of the most dangerous things about crypto is that it's a 24/7 market. There's always another trade, another opportunity, another reason to check your phone at 3 a.m. But here's the thing, more trades don't equal more profits. In fact, it often leads to the opposite. Overtrading leads to burnout, emotional decision-making, and ultimately, more losses. Instead of trying to catch every single move in the market, be patient and focus on high-probability setups. Remember, it's not about how many trades you make, it's about making the right trades. Quality over quantity, my friends. It's easy to get caught up in the short-term price fluctuations of the crypto market. You see Bitcoin go up $1,000 in an hour, and suddenly you think it's gonna hit $100,000 tomorrow. But here's the thing, context is everything. Just like you wouldn't buy a house based solely on the color of the front door, you shouldn't buy crypto just because it's pumping on the 5-minute chart. Always zoom out and look at the bigger picture. What's the daily trend? The weekly trend? Is Bitcoin holding above key support levels? Are the altcoins following Bitcoin's lead? Understanding the macro environment is crucial for making smart trading decisions. If you're trading without a plan, you're essentially flying blind. It's like going on a road trip without a map or GPS. You might get lucky and stumble upon your destination, but it's more likely you'll end up lost and frustrated. A solid trading plan should outline your entry and exit points, your risk management strategy, and your overall trading goals. It should be your North Star, guiding your decisions and keeping you disciplined even when the market gets crazy. Remember, emotions are the enemy of good trading. Having a plan helps you stay rational and consistent, which is key to long-term success in the markets. Alright, quick recap. 1. Don't chase pumps. Do your research and wait for pullbacks. 2. Use risk management. Protect your capital like it's your firstborn child. 3. Avoid overtrading. Focus on quality trades, not quantity. 4. Zoom out. Understand the bigger market trends before making decisions. 5. Stick to a plan. Trade with a clear strategy, not emotions. Avoid these mistakes and you're already ahead of 80% of beginners. Now I want to hear from you. Which of these mistakes have you made in the past? What did you learn from it? Share your experiences in the comments below. And as always, smash that like button if you found this video helpful. Subscribe for more crypto tips and tricks, and I'll see you in the next one.